Paul, we're getting this very positive data out of China, as Katya just mentioned. Is it enough? Is this a fluke? How are you thinking about it?
Yeah, hi, Kriti. I think that this briefing in particular is not really going to give the market exactly what it needs. You know, the expectations that have been built in, for whatever reasons, on Friday were quite high. All we really heard was some building out and incremental details of things that have been highlighted already a few weeks back at the MPC meeting. You know, the market really wanted a big billion-dollar number, really wanted a triple R cut, something like that, to really get people excited and fire up for the gains. Didn't really see any follow-through in any of that. Nonetheless, there are some inflows coming through. I think if you look at the Hang Seng today, for example, you know, 8 or 9 of the 10 biggest movers are the 10 biggest companies in that index, which points to this idea that it's a kind of portfolio inflow across the index rather than anything specific or that people are focusing on today. So there is that positive momentum, a little bit more international interest where people are allowed to invest into China. But really, you know, the data, still a bit meh, as many reasons to be negative as positive, and the policy stimulus measures still very measured.
OK. Strange noises coming out of Paul Dobson. Let's talk about what's going to move markets this week, Paul. What are you focusing on? Is it the Fed? Is it the data? Is it the politics? What do you think is going to provide the volatility impulse?
Yeah, I think the politics more than anything. I was reading our Fed story actually just before I came to talk to you guys, wondering what we were saying. My view is kind of the Fed doesn't want to get involved too much in the politics at this moment, partly because of the uncertainty and partly, you know, because it's supposed to be apolitical and perhaps, you know, there's this other idea, a little bit like the Bank of England didn't want to evolve itself too much when Liz Truss was moving the UK markets a great deal, that, you know, leave this to the politicians and so they can find their own way. So I think we're still in that camp now. What Bessent said yesterday on US television was quite interesting again. Investors responding to that a little bit by pushing down those markets. I think if you heard him out, a lot of what he says is quite sensible. It's about getting to grips with, you know, the US spending. It's about pricking a bubble before it gets too inflated. But the problem is that the market doesn't really want to hear that right now. It wants a little bit of reassurances on the economy, on consumer confidence, on the outlook and those kinds of things. And saying we're not too worried if there's a correction isn't going to help sentiment, particularly for the equity market this week.
I mean, we were debating before we came on air, Paul, whether it was really that disappointing that Bessent had said this. Do you think, therefore, it is just a rotation?
I think that yes, we have a really good look at that in today's macro view column, talking about this idea that actually just better opportunities elsewhere. People leaning into that more, looking at Europe, looking at China, looking at other places to put your money. And so that just makes the US less appealing. But I think there is that genuine concern about tariffs and the impact on the economy as well.